All right. Good evening, good morning, good afternoon, everyone. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm always happy and grateful for each and every one of you being here with me as we take a look at the technicals and the fundamentals to see what we could take advantage of in this Forex market. So, without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take notes, and let's make sure that we participate and engage. So, as usual, everybody, do me a huge favor. Drop me a one in the chat. Let me know that you're ready to go, and we can get this session started. Awesome. Appreciate it. Cool. Gotcha. Let me make sure everybody has control over their mic. All right. And we are ready to rock and roll. Okay, so let me exit out of this screen and we'll head over, take a look at the Forex factory. So we saw that the CPI for the UK came in at 10.1 on a forecast of 10, right? So again, high inflation, core CPI came through at 6.5. So we know earlier today that it was front page news earlier in the day. So we can see here that the annual inflation rate in the UK rose 10.1% in September 2022 from 9.9% in August, returning to the 40-year high hit in July and surpassing market expectations of 10%. So we see that the largest contribution to the increase was from food, 14.8 versus 13.4 in August, namely oils, fats, and dairy products. Consumer costs also sharply for housing utilities, 20.2 versus 20% amid soaring prices for electricity, right? We know what's going on with that. Gas, we know what's going on, and home fuels, all right? So we already know what Russia said, it's gonna be a cold winter, all right? So on the other hand, cooler price growth for motor fuels further slowed inflation for transportation, 10.6 versus 12% previously. All right, the average petrol and diesel prices were about 175.2 and 186.6 pence per liter, respectively, compared to 134.6 and 137 pence a year earlier. So the annual core rate, which includes energy, food, alcohol, and tobacco, rose to a record high of 6.5% compared to expectations of 6.4. On a monthly basis, consumer prices rose by 0.5% in September, unchanged from the previous month. So inflation is running rampant. So what is the BOE gonna? Right, everybody's looking at the United States. It's got to do something about the dollar. Well, hey, these other central banks have to step their game up, get more aggressive with these hikes to combat inflation because it continues to be a huge problem. So they're gonna have to, if they really want to fight it, they're gonna have to quit tiptoeing around it with these 50 basis point hikes. Need to come probably 75 or 100. We'll see if they've got the guts to do what needs to be done. So that's the news out of the UK. Coming down into Canada, we can see the CPI, 0.1%. The median CPI, 4.7%. You got 5.2 on the trim, 6.0, right, on the CPI. So again, hey, they're gonna have to they're gonna have to be hawkish. They're gonna have to remain hawkish in Canada as well. So this is just kind of going on and on and on. And we can see here that just came out at 8:30 for Australian employment change, missed target, okay? And then the unemployment rate came in as forecasted. Okay, now tomorrow we got the Philly Fed Manufacturing Index coming out. That's always important. Why? It's the leading indicator for economic health. Businesses react quickly to market conditions, and changes in their sentiment can be an early signal of future economic activity such as spending, hiring, and investment. All right, so that's going to be an important report tomorrow. But hey, U.S. economy has continued to remain resilient. So we'll see what happens. But next month will be interesting with some of these central banks having rate decisions coming up. We'll see how aggressive they get. We know the United States at least 75 basis points coming out of the U.S. So they haven't pivoted None whatsoever. So these the energy we're seeing in the stock market somewhat lately, getting a little bounce, to me, just a bear market rally. The Fed hasn't changed their stance. So it's giving currencies the opportunity, at least from a technical perspective, on a lot of them to reach the high prices we need to get short. That's my opinion. Over taking a look at the dollar index, you can see, right? We're ranging, but we got a little bullish, right, today. We got bullish again today, and as we come into the Asian session, we see the dollar pushing up a little bit more, right? So this level here is key. We've got another level here now, right here, coming in. So we'll see how long it wants to stay range bound and what happens as we come back to retest this level, because that's exactly what it's looking like it wants to do. So, hey, as they say, don't bet against the Fed. And it's hard to go against the dollar long term for any type of major reversal. Correction plays, yes, but ultimately we look for that dollar to remain bullish. Any questions on the fundamentals? All right, so we're good to go. And so we always like to cover these fundamentals because we do. If you read the news, you see the back and forth, right? These reports come out, the pundits on your financial channels, they'll call it like it's a football game, right? Like it's a sporting event. Back and forth we go, but we always have to, from a macro level, really ask ourselves the question, okay, all of the 24-hour news, all of the chaos, really has anything fundamentally changed yet? And the answer is no. We still have huge issues with inflation. We still see where a lot of these central banks are going to have to run a little bit harder to catch up with the Fed and to help them internally deal with inflation within the individual countries. So central bankers still have a ton of work to do to combat this situation. All right, so that's where we stand. So right out the gate tonight, because I have some stuff I want to take a look at, but I'm going to ask all of you, are there any pairs that you need me to cover, take a look at for you before I dive into what I'm looking at for this evening? Give you a few seconds to put it in the chat. Euro Aussie, Reese, okay. GBP pairs, well, that just set it off, didn't it? GBP pairs, I could dig it, Brandy. GBP pairs and yen crosses. All right, so take a look at it. All right, so Reese called for the Euro Aussie first, so we'll take a look at that. Before we get going, let me ask a question, all right? Now, I always like to ask as we get newer people in the room. Does anybody trade, in regards to day trading, like 5-minute and 1-minute charts? Anybody do that? Joy does. Reese, so Joy. Okay. Reese. Okay. I do too. I get down when I have time to day trade. I get down on those charts too. So just two people. All right. Joy, Aussie, Swiss. Okay. That's actually one that I had on my list. I did. Swiss. Okay. All right. I know a lot of people don't. They think it's super volatile down on those lower charts, but once you get used to them and understanding that it's still the same wave sequence, it's actually pretty cool to watch the price action on those levels. But just wanted to ask that question, kind of get a feel, because I actually want to start. Ryan and I were discussing it for the last few days, trying to determine whether or not we want to put those type of day trading setups in the Telegram. So that's why I wanted to ask. It builds patience. It is. It's just the same thing. Reese, please do. Okay. Yeah, I like Ryan and I both like trading cloud breakouts, on the 5 and on the 1 minute charts. It's decent. But you have to have time for it. It is the same thing. It just moves quicker. It is. It is. All right. So let's thanks for the feedback on that, everybody. I appreciate it. And I know it'll help some newbies too, while they work to build their patience for these longer swing setups. All right, so let's take a look at this Euro Aussie to start out, and let me move some things around. Okay, so that's a 15-minute move there. Don't want to do that. So we know we've been swinging to the upside. Okay, major, right? So we always tell you, spend time on a chart, start identifying things, right? Top-down analysis. We've got what beautiful monthly level that forms support, right? 143.07, and then look what price did. Okay, we pushed down, we failed to break out and continue. We retested again, putting us into what? A double bottom at this level. Okay, beautiful patterns, especially on those higher time frames when you can identify them. All right, and then we've been long ever since. It's a Euro Aussie, it's a big mover, so that's quite a ways, right? Over 1,200 pips that is pushed up off that level. Okay, so we come down. All right. We had a new AB boundary because it declined, right, to the downside. And so this just helps us, it gives us extra confirmation, right? To say, okay, well, we got a new AB boundary, we got this double bottom, and so we can start mapping out some targets. Okay, we can start mapping out some targets, 382, so on and so forth. We all know that now. Okay, now at the end of the day, though, we always say that, hey, the fibs are just a tuxedo, right? Dressing up the price action. At the end of the day, here's that double bottom, and there's that push. Okay, and we can measure that move. And we said, hey, we're at the 118, 127 zone. Wow, this might form a high, and we might get somewhat of a correction since this moves 1,200 pips. Okay, and we've got this little rally in commodities, and so we may see some relief at this level. Now it's bouncing around a bit. Okay, I'll take that down. All right, but at the end of the day, that's in the zone where that price could reverse. So we'll see if that high holds and continues to move to the downside. Mary, question.
Just an observation. I'm trying to understand this action. So that's a double bottom. Yeah.
Yep, like you see here.
Okay. Yeah. So it's a double bottom. So once we see that price, I'm here moving my mouse so you can see it. Okay, in the middle of the double bottom, once we see price past that point, then we should think that it will continue. Then once it passes, it takes up the previous high.
Yep. So yep. So we're looking for, that's telling us that, hey, high probability of a reversal. And then look, here's your breakout after that high, right? So
I bet if we didn't have the fibs, we were just looking at pure price action. Yeah.
Yep.
We see the double bottom, and then we will look to see if it caught previous high.
Yep. You kind of hard to understand. We got an echo. Say it one more time.
Okay. Yeah. Sorry about that.
That's okay.
Can you hear me any better now?
Still got an echo, but go ahead.
Okay.
I can make it work.
We have the double bottom. Okay. And then on the way back up, we will look to see if it took the previous high out.
We're right here?
No, further up.
Oh, up here.
Yes.
Yep. So you can look at that and then look for it to see if it, because then it's just price action, right? We got highs all the way up here, right?
Yes.
Right. So you had the swing high there. So now we know. Okay. So now it's just a matter of how far it wants to check back, because this high is just like any other high. So this is a previous, like right here. So before, think about it. When we have this drawn up, this was a level, right? and we just broke it. Yep, we just broke it. So now it's just a matter of it falls in line. So when we dress it up with the fib, it's like, well, we're at a 118, 127s on this 80-20. We've got a new high of resistance here, but look at that, right? That's a level anyway. You see it?
Yeah.
So it's respected. So before you even get this this swing high to form, you know by looking left, okay, there's some structure coming across there, right? So then your case starts to build even more when you put the fib and say, okay, well, if I'm just looking at this by itself, just raw price action, I've got structure. It's been an impulsive move. We just took out a level. We know price likes to take out a level and then eventually correct or retest the level or go deeper, right? Depending on how big the sell-off is. And now I've got this 80-20 zone, and it's holding and it's stalling and it's forming a swing high here. So it's like, okay, is it going to respect this level again? So when you drop that in there, like so, that just, hey, if I look left, I'm seeing some things across there, right? See here, right? So it's a level where price has been before and it respected. So now here's the possibility. Hey, then I start throwing some other confirmations on there, like, okay, I'm in my sell zone on my stochastic, so we may see some relief here. We may see some relief. So when you go down through your lower time frames, if you need additional confirmation, then you can wait for trend line breaks and pullbacks, right? Trend line breaks and pullbacks. If you're not the type of person that says, you know what, I'm gonna drop a trade in right here, put my stop up above, resistance to see if it holds, right? So small position here. Then if I go down, so if I got my, if I have my my stop, right, somewhere up above my high, above resistance, and it holds good, I've already got a small position in there. If it moves up, takes me out, that's okay, right? Just let me know what it wants to do. I got a small position, I got stopped out, that's all right. But now if it turns over though, now I can look to build on that position. So if I go down to my lower time frames and I start seeing those waves, right? Like we saw on that Aussie New Zealand pair, and we start getting a trend line breaks in those waves on the lower time frame, then I can look to add to my positions from that point once it starts to move in my direction. So that's how I typically like to play those type of setups. Right now, this may ultimately, like we said, we're getting that little commodity rally somewhat. The stock market, gave a little push, corrected a bit. So this here may only truly be a correction. It may not hold here. It may break below here, push deeper before continuing long. Right, but in the meantime, it leads back to that 382 if that's what it wants to do. From a daily time frame, that's 500 pips. So we have to pay serious attention to that. Okay. Hold on 1 second. Body set up. All right. So I hope that answered your question a bit there. But so that's where we are.
Yeah,
so okay, you're welcome. You're welcome. So if we do start to push down, then we have to look at that, right? We've got this level that we just broke through. It's a beat boundary. That's over 100 pips away. And that's past resistance becoming future support. So then you start to think in your head that, man, if I get a break of this 1540 level here, then we definitely could see more downside pressure. Okay, just trying to fall in line with levels that everybody else may be thinking about, right? Which I gotta bring that down. Okay, so right here. So we've got to push up. We almost got to that D extension, but sometimes when that higher time frame is controlling everything, sometimes when it's time for it to correct, it's going to correct. All right, so that's why I have this here now running to see if we can get that break, and that's on the 4, whatever time frame you like to trade on. Right, we see it's just how it's just dancing around that level. Okay, so we have to pay attention to that. That is kind of moving moving sideways. But you can see that, everybody, like even the fibs, just like we say, it gives you extra confirmation, just like any other indicator. The beautiful thing is it can give you some targets. But if you just, sometimes, you know, when I go through my charts, a lot of times I'll mark up my charts, and the last thing I'll do is put my fibs on, because I just want to see the price action. Right? I just want to see, right? I want to see that this beautiful V bottom, right? That occurred, right? That's off. I don't want that, right? So you see that? See this here? Okay. Sometimes you just fall in love, study the price action, right? Look at the look at how, right? Look at that. How beautiful that was, and how that price accelerated. So sometimes if you just study the price action, look, right? Look at it breaking and retesting the zones and holding above that level. That's why it's important to always be disciplined and mark your support and resistance levels up. Okay. So look at how that traveled just from level to level. 660 pips. Then we got the break, right? Tried to pull back and retested, it held, right? And then we moved up. Okay. So it's always gonna be about the price action. Okay. Fibs help you what? Turn in direction, where to get in, where to get out. You know, so instead of you potentially jumping out of a trade so early, we may know like, well, the extension is all the way up here at 1600. So I'm gonna look to stay bullish, right? Up to 1600. Now, if it confuses you when you put fibs on and everything like that, and you just like a clean chart, then just know, well, my 1.618, just hypothetically speaking, right, is at 1600. So my direction, I got a trend line break, so this can possibly move, right, all the way up to 1600 before it makes a major correction, potential reversal. That's how you think about it. But just look at it, right? Nothing on the chart. Look at the price action. Okay. So if you come up to our daily, right, and we clear this out, right, just look at it. Okay. So you always mark your charts, especially in the beginning, to get that repetition in, and you get faster and faster at doing it. But look, see that? You see how price, look how impulsive price was to the downside here. Look at that move, how strong that was. Okay. See that? Look how strong that was. And then so you think, right? And that's why these double bottoms are so powerful, because you're like, okay, this has been moving down. Look how price pulled back. Where did it pull back to, everybody? It pulled back to structure. Right? Right? And then it pushed. But look, another attempt to break 143. It couldn't do it. And look at the reaction you got. All right? Look at the reaction you got. See? So you can, if you're patient, you can literally sit on your charts and play this game. It just becomes even more powerful when you understand the Fibonacci sequence, because it helps you build the confidence in the direction you're going, right? And how long that move in one particular direction may sustain itself. Okay, so you don't get so crazy nervous when you get that correction, right? And you get that correction like, oh, the market's about to fall bearish forever. You know, this is a correction, right? It's going to take back a percentage of what it gained, and then we got a potential move up, right? But you see, right, the very foundation of it all is when that price settles, it's going to form a swing low. See that there? When it settles and it wants to reverse, it's going to form a swing low. Okay. And then look at that move. So now you could play it like this, right? Think about it. If we're just looking at price action, okay, this is a good one to study. We're moving up off this level. Now, because with the fib sequence, we look at this level and we say, wow, well, it's another level of resistance, but it's not just any level of resistance, because with the fib sequence, it's also 118, 127 zone. So pay extra attention to that, because this may create a deeper correction this time. It might not just be a quick check back and an explosion back up through 156.78. This time we may see a deeper correction before it forms another low and another level of support, right? So another low, another level of support, and then we settle like this, and then that's a higher low, right? Here's a low, here's a high, here's a lower high potentially, right? If things play out. But that's how those levels start to form. Okay, you just have to see it. Only way you do it is you spend time on your charts whenever you get a chance. Okay, so now if you just plan this, you're like, all right, if this forms a high, my first level I'm looking at, okay, is here. Didn't know anything about fibs. I'm just looking at price action. It's a check back to this level, like this. Then the question becomes what, everybody? We get back to that level. What are we at? What are we going to look for?
Look to see if it break below, break and close below.
Correct, right? Close below. Or if it stalls here and it forms a what? Swing low, right? Swing low, because look, past resistance becoming future support, potentially. So if it holds there and forms a swing low, okay, then look, right? If I'm just trading raw price action, then I'm gonna wait to see if it takes off again. Okay, like that. See? Swing lows and swing highs. Okay. If it re-solidifies that support, right? And that holds, then hey, we may move back up to retest this level. I have to make a decision, right? Do I want to take that? No fibs, just looking at price action. Okay. Then if we break that level, then we say, okay, does the momentum take us higher through the zone? Do we retest this zone and then continue? Okay. Now, in the example that you gave, spot on. Does it hold? If it doesn't hold and it breaks, do we come back here? Do we form a what? Somebody tell me. When we retest this level, what do we want to see form?
Resistance.
Right, right. A swing high, resistance. Okay, that forms there. Then guess what? Bang. See? And what is that doing? Those swing lows and those swing highs as price move creates a wave. See? That's it. It only moves up, down, or sideways. Right? That sideways movement, that pause, that accumulation before that breakout. Eventually it'll break out. Right? And then we're back down to this next level. Well, if it retests and holds back down to this next level, that's over 600 pips. We're on a daily chart. Okay. So that's that. Trading takes a lot of patience. It really does with these larger swings, right? Takes a lot of patience, but you can scale in like we always talk about. You can scale into your trades. Hey, this is a level we just formed a swing high. I'm gonna drop it. I'm gonna drop a 1/4% in there. See if it's ready to go. All right. And if it is, then you build on the idea to the downside. Questions on the Euro Aussie? No. Okay. So that's where we are. So when you move down to your lower time frames, this is what you're seeing. It's dancing around, right? That's why we bring it. Now it's cool, right? Because we talk about the cloud, and it's at a glance, right? How you can see everything that's going on at a glance. Well, it's the same concept when you do top-down analysis and you bring your levels down. From this 4-hour chart, I can see everything that's going on the weekly, the monthly, at a glance, right on my 4-hour chart. That's why we drag them down. Same thing with the 1, right? I can see everything. I know because I color coded that these red levels are daily levels. So I know what's going on there. All right. So look at the game, right? Broke a trend, we're moving up. Okay. See? Didn't catch. All right. If we break a trend line, there's a potential for price to be moving down. Okay. Okay. But we can clearly see that as it moves up and as it looks to move down potentially, it's going to move in waves. Okay. And that's where your fibs come in. But at the end of the day, this is the price action. This is it. Don't have to overthink it. Okay. All right. That's the Euro Aussie. Okay. Now, we had some pound pairs, yen crosses, Aussie Swissy. All right. So what I'm going to do is I'm going to go to this Aussie Swiss first, because then we're going to go just to a whole set of pairs. And we'll take a look at the daily. And this is what I mean by when you take a, oh, you're welcome. You're welcome, Reese. When you take a look at this, right, it's just moving down. That's what I mean by overall. Yes, we got the day-to-day and all of the hoopla surrounding the markets and everything that's going on. But when you take a bird's eye view of everything, it's still projected to the downside right now. Okay, still projected to the downside. So again, right, we take this off and we see clearly this is moving down. We got a little bit rangy. We got a little rangy here, but ultimately, look, we broke down again and we came back to retest. Look, see this here? See how it's all just swing lows and swing highs? Look how this broke and pushed up into a range. But what did that cause? That created a low. At one point, right? This was here. See? Right? See that zone had another tight one there. And then look here. See? See here? See how it's just crashing down through the levels? And how it goes, it retests the levels. Okay. And how price, okay, you can see it real good on the higher time frames, how it went back to retest it, then it just moved sideways. And then the bears won the fight and then pushed back down. And how it crashed through 2 levels here. And it tried, right? It tried to go back and make up for it. Bang. And it just came back down. So what the market's doing is moving down. Okay. So the question becomes, right, do we start to move up to retest? Look. Look at that. Broke it. There it is. Okay. So if you were position trading from a higher time frame, like a weekly, okay, and this was your chart, and your long-term position trading, and you're holding, and your macro analysis tells you bearish commodities, Swissy safe haven, recessionary fears, market starts to tighten, we look for declines. It's declining. All right. Fundamentals are important. So here, look, we came through that level. I'm trading from the higher time frame. I'm like, hey, fundamentally, I'm bearish. I get a break at that level. I got to order right there. See? Played it so many different ways, right? So I got to order right there. Boom, for short. Okay, short. Now it's just a matter of, hey, it's going to correct. How deep is that correction going to be? Well, we can measure that with the fibs, right, on the lower time frames. Okay, measure the depth of that correction. So we come to the daily, right? Bearish. It's pushing bearish. Look at the levels. See that? Consolidation, breakout. We pushed. So that move there after that break of that level. Okay. Bearish candle close. 240 pips later. We're to the next level. It's a matter of what it wants to do. This is the daily time frame. Right? Does it give me a push up higher? And if so, if it doesn't make it back to the top of the zone, which could be what, the beginnings of a potential range. Okay. Will price break it out and retest it? But if you get that pause, okay, and you get this swing high that starts to form, okay, then guess what? If I get a swing high that starts to form there, that creates another level of resistance. And if it holds that level, then we look for further declines. Okay. That's how you go about it, thinking about it. Okay. So you could tell, right? It's choppy right now. But if you put a resistance level in, see the swing high. 2 candles to the left, 2 candles to the right. See? As it moves in waves, it's just creating levels. See? Now we got that pause. Nice bearish candle. Look, it recovered. So what's going to happen next? See? Four. See? We just saw this on a higher time frame, right? The lower the time frame, the more you zoom in. That's all you're doing. So it's like, hey, okay, almost got a 382, not quite. See how that's turning over a little bit? So it becomes like, man, am I going to break that level? Okay. So look, take it all off. Just see it for what it is. Okay. You got levels here, right? You can see that. You can identify that. You all have done the training. You can identify that. You see that in your sleep. Look at that. That's another one, right? It's tight. That's another swing high, 4 hour. Okay. See how that formed that swing high? You see how it's trying to decline now? Okay. That's the foundation of it all. Okay. So when you play it, it's like, hey, do I get a move back? It's a 62.45. Okay. Swing highs and swing lows. Okay. That's that on the 4. Okay. So from a fib perspective, right? I like these zones here. So I would prefer, for me, if I'm swinging on the 4, I would love for it to move here first, give me a little bit more upside momentum, and then form that high here. Okay. So I use the fib because it gives me some filters, right? And where, hey, where's that optimal zone where I can get that nice risk to reward, right? But some people don't trade like that. Some people just want to trade zone to zone. Hey, I want to try to take this back to support at 62.26. It formed a high here. Maybe I can get it back to that level. That's fine too, right? Maybe back down to the low, 40 pips. That's 57 pips. Some people just want to trade like that. Okay. And you could do that. You could trade successfully like that. Right? But from the fib sequence, man, I love to see that get high in that zone and then turn back over. Okay? But if you'd like to trade zone to zone, then by all means, mark your top-down analysis, support, and resistance, and go to it. Go to it. Okay. So that's the Aussie Swiss. Right. Still thinking bearish. Right. On the 1 hour, we got a nice little move, but I still love to see that push up into the zone. Right. That's just where my eyes are trained for the most part. I love to see it get up in this sell zone here and then moving that bearish direction. So that's where I'm at. And then if I don't get it, then it's like I'll just wait for the next one. Wait for the next one. So that's the Aussie Swiss. Any questions on the Aussie Swiss? All right, cool. So let's look at the let's go into these pounds. Okay. So let's take a look at them. Click through them real quick as hopefully they start to settle out and make a little bit more sense. Okay. So this is where we are. Let's go take a look at it. The price action. On the pounds, we know they started to move bullish. Okay. Out of that zone. All right. So let's, you know what? All right. 15, that's a 15. So make sure we got the same type of chart set up. All right. Make sure we got the same type of chart set up there. Current workspace. All right. So we're all looking the same. So, hey, let's zoom it out. Okay. I used to be so afraid of these charts and this price action. Like, this is just a mess. What is it, right? But the more and more you do it, the better and better you get, just like anything else. So we come out to the monthly, we can see it. You can even come right to the year. Has anybody ever just gone out and looked like what's going on from the yearly chart? Okay, look at this. Okay. That's it. Nothing to be scared of. Just some candles. Just some candles. Joy you have? Oh, that's awesome, right? So you're just gonna go look at it. Look at it. That's it. I'm not afraid of you, chart. All right. Here. Just like my dad always said, if you can read, you can learn. All right. Now with YouTube, if you can see, you can learn. Right? Just watch videos. So here. Don't change the approach. Box it out. Okay. Stream high. Stream low. Okay. Smart trader is beautiful. we know how to identify, right? We don't need Smart Trader. We can look, swing high, swing high, swing high, right? Straight across the board, boom, boom, all right? So relative support and resistance, that's what it's gonna give you. See, look, bang, okay? Makes it easy, right? Color coded, bang, monthly high, okay? It's a monthly level. Just doing this for good measure, right? Now, let's throw in our support. Take that resistance off, put our support in, okay? And this is weird because of how it wicked out, okay? How it wicked out, but we'll catch that on the lower time frames. So right now, I'm not even going to use this one. I'm just going to take this low. See how it's a cluster? So a lot of times I'll just take the lowest because I understand that in actuality is really a zone anyway, okay? So there we go. All right, and I should have kept that on. So hey, within the same chart, I'm going to do the monthly and the weekly. All right, so look, here's my weekly chart. See, we're just zooming in. Okay. Now, this comes cleaner. So now I could take that, right? I always say we're going to catch that weekly, boom. So I know I got a weekly and a monthly level there that's strong. Plus, see, get outside the picture frame. See the big picture. See how that double bottom? Look back there. See that big cluster right there? There we go. All right. So we see that now. We got a reaction at that level. We just broke through, right? That at one point was resistance. Look at that. Past support became future resistance. We pushed through it. All right. So this is our monthly and our weekly level. So now, okay, you see Smart Trader makes it real easy. We see what's going on. This pound Aussie has been moving to the upside. Okay. Got to rally because all the craziness that's been going on. Bullish. We see that. Okay. Now, what I'm going to do, right click. I'm going to link all my objects, all my levels down to the lower time frame. So whether you trade on the daily, 4 hour, 1 hour, 15 minute, 5 to 1, those levels are going to be there. Okay. Now look, I'll zoom in here like this. I'm going to do the same thing. I'm going to do the same thing. I'm going to come in here and put in smart resistance, smart support. See that there? My daily, love it in red. Okay. Monthly in black, weekly in blue, daily in red. Now, I don't want to keep linking all of these levels down because I've already did the monthly and the weekly levels. So I'm just going to do these one by one. So there's a daily support. I'm going to link it to the lower time frame. Here's a resistance level. I'm going to link it to the lower time frame. Boom. Here, okay, there's that monthly at the high, but we got a daily level that crept in. So that kind of makes it a zone, right? Like we talk about. See that? Boom. Take that off, make it clean. See? Right. Just like that. It applies to any chart. Stocks, crypto, same approach, everybody. Same approach. That's the magic. Okay. Look, not rocket science. If I want to draw my trend line, where am I at? There we go. Price is reversing, moving up. Now it's just a matter of, do I want to measure that move, that impulsive move? If you do, okay, you can run a fib to the upside. See where we got that pause? But look, you see that anyway. You see, look, you see it. Okay, just don't jump on your chart and start dropping fibs everywhere. Understand why we mark levels. Look, just like that. So it's been pushing up, right? Strong off that bottom. And we know from the higher time frames that was actually a double bottom, 2,100 pips. That has moved up. Crazy, fundamentally driven. So that's where we are. So look, I can come down to my 4. If I want to put 4-hour levels on, I could do that. However you want to play it, okay? Chart will start to get busier and busier, but this is where we are. We've been moving up, top side. So now it's like, all right, if you're saying you start to determine your bias. Well, if I think that this is going to keep moving up, then I'm looking for a level, right, where it may come back down and form a low and then reverse out. So we see this top half here, right? You see this, look straight across there. You see that? Right. And now you can see from looking left, why you got that pause there. Okay. So then it's just a matter of, man, maybe I can get that at a greater discount. Okay. Maybe I can get that to come back down. See this level here? You can just trade reactions. So maybe I want to wait for it to come down to, what is this? What is this zone? This zone here, like that. Okay, see that? Past resistance area becoming future support. So if I could just get this to come back down, and this is how you can form your trade idea. Okay? No fibs, just price action. So maybe if I can get this to work its way back down, then I'll look here and see if it wants to respect that area. How can I identify that? Well, we'll see if it settles down and forms a swing low. If it does form a swing low, okay, then maybe I use extra confirmation. Maybe I want to say, hey, by the time it works its way here, I want to make sure that my stochastic is in the buy zone. I want to make sure a swing low forms, and I want to see a trend line break. Right? Like so. Okay. Boom. Like that. Maybe you get in aggressively. Maybe you say, I want to see the trend line break, and I want to see a check back. Like that. And I'll look to take it back long. And then you say, well, I'm just looking at the price action, no fib projection. Well, what do I want to get long to? Maybe I'll just take it back to 181.94. Oh, okay. It's almost 450 pips. Call it 450. Then I'll gauge the reaction here. And if it breaks through, right, and I get a retest and it holds, then I'll look to continue. Okay. Like that. Or maybe I'm out at this point. I've had enough. I'm good. Or maybe I reduce my trade 75%, 50 to 75% to see what happens. Adjust my stop, right, in the profit. And if it breaks through and it holds, then I can look to add back to the position. Okay. Like so. Okay. Just think your way through it. And everybody can do it. You guys can do it. You work so hard. Okay. So where the fibs come in, and that is to say, well, if my bias is bullish, okay, it kind of gives you some definite areas where I may want to get back in. So you see, we identified a zone without the fib, but look, if that pulls back into this area, that's one of our sweet spots. Okay, that's one of our sweet spots. Clear this out. The zone. Then look to get back long. Okay. And guess what? We put our stops in. And if the trade I didn't work out doesn't work out, I already knew before I ever push the buy button that I'm only going to be out a 0.5%, 1/4%, 1%. I already know that. And I'm good with that. That's why I took the trade, right? So if it comes in my sweet spot here and I take that trade, then I'll look to get long. Okay. You may say, well, I'm only trading with structure, price action. So I would love to see it come back. I can't erase that now. All the way back down to here. And if that's your trade idea on this pair, then you have to be willing to stick to that and move on to other charts until it comes back to your level to test. okay, till it comes back to your level to test. Boom. So that's what you have identified. I'm a bull. I want to see if it'll retest that level. Then you wait. Now, if it takes off before it gets to that level, then you move on to another trade idea. Okay. Just good sound price action. Trader, that's all. Okay. I think we had a hand up.
Hi, Benny.
Yes.
Donna. How are you?
What's up, Don? What's up, Donette? I'm great. How are you?
Doing good, thanks. So on this example, right? I guess what is your gauge? I know we're looking at it under 4 hours. So if we go up to the daily, we have an 80-20. And if we're looking for it to come down to the 382, we'll take out the A on all those other levels.
Correct. Right. So
I guess how are you gauging? Is it just looking at the fundamentals? Are we still, I mean, that's the part that really,
right. So it all comes down, right, to the idea that you develop. Now, you know that this is a 382 sitting right there because you're using that fib, right? But if I'm just a raw price action trader, right? Do I know that? You see what I'm saying? So if you're using, right, this is your edge, okay? If you're using this as your edge of fib, then this is what you go by, right? This is what you're gonna go by. That, hey, I might get this to turn over and it may push lower, okay? So that's how you use it, right? So it just depends on what your thought process is.
Okay.
That's why I wanted to cover it, right? So you may know, like, man, if this comes down, it likes to see that at 382. So this 173.30 may be broken. So this idea here is not for me, right? But at the same time, okay, at the same time, we said what? If we come down to this level, we look for our confirmations to line up, right? See what I mean?
Yeah.
So we may not get things to align, and it might break that level and turn over, right? Because then from this 4 hour, right? From this 4, we could be looking at it, right? A check back and then a continuation to the downside. Okay. So it just depends on what your thought process is in the game that you're playing, right? Because we know, right, there's winners and there's losers, right? So if I'm playing this this price action, right, and I'm thinking that it's going to hold and it doesn't, then guess what? My idea was wrong and I get stopped out. See what I mean?
Yeah.
Right? And you get stopped out. Okay? Because sometimes people, right, they'll play. Hold on, let me reset this real quick, everybody. Click the back button so many times. So when they're playing this price action like this, okay, so think about it. Just took that level out, didn't mean to, but put it back in. So here, take this out. We think in terms of long-term swings, right? A trader using price action may think if price works its way back to this level and I put my stop, follow me now real close, right? If I put my stop, say what's the 73.30? So we say 7,300 even. Okay, like this. Add. Here. Okay, something like that. They may be thinking, right? So look here. 100 pips. I don't want it that much for this example. Say like this. So they may be trading like, hey, I got my stop here. Call it 40 pips, right? We'll call it 40 pips. So if I get this reaction, get a swing low to form, I got a 40 pip stop. A price action trader, right, off of these levels is thinking in terms of what? Risk to reward, right? So I might have a 40 pip stop. If I'm in a 2-to-1, I'm thinking 80 pips. Okay. See how that's not much? See that on the 4, right? If I got a 100 pip stop, let's call it 100. I might be thinking 2-to-1, 200 pips. It's a pound Aussie pair, right? 200 pips is nothing. Maybe I'm thinking back up here, okay? 370, back to this level that I identified. So like this. Like this here, okay? So say I played that move and I get this reaction. Here's my stop. Here's my TP. Okay. Like that. Price comes down. Hits my zone. And moves up. Okay. Did the trader win the trade?
Yes, sir.
Right? If they bought that, they won that trade, right? Okay. Here's the 382, right? Got it. Yes, that's the 382. There it is. You saw with your fib on the daily that you've got an 80-20 and your target is the 382. We agreed that he won that trade, right? Everybody dropped me a 1 if this price action trader that bought off support won the trade. All right. Okay. So we agree on that. Now, you played it from the higher time frame. He won the trade. He gets a reaction here. Did you win your trade?
Yep.
Awesome. All right. You had a larger play, right, in mind because of what you saw. 80-20. Okay. But we know that if this comes off this 80-20, it comes all the way down to this level. That's over 1,100 pips. Unless you do something crazy, like the UK government and the Bank of England, the chances are slim that it's just going to go like that. It can happen in waves. So you both are right. That's the beauty of trading. Everybody follow me on that? Yes or yes? Drop me a 2 in the chat. All right. All right, because that's a huge long-term move. So that may ultimately be that destination, right? But you may get that bounce there. Okay. So two different styles, 2 different viewpoints. And I think that's amazing. Right? I think that's amazing about this market. All right. Any questions? No. All right. All right. Blaze through these real quick on these pounds. And then we'll wrap it up. Right. The pounds are just crazy funny position, right? So they're just moving up on this pound CAD. We're getting a reaction off this 157.59 level there. Okay. There's that swing off the low, all-time low, over 1,500 pips in a hurry. So much so that it's just messed the algorithm all up. But here was your smaller fib got taken out. But again, right? Don't let it confuse you. Just pull it all off and look at the price action. What is it doing? Okay. See? New level of support. Right now, we're respecting this. Okay. We're respecting this. We push down past this level. Okay. Get this out of here. Sometimes when everything gets all messed up, you just have to look at it in simple terms. Okay. There. There's a new level. Price action is held. It's been all over the place. And this is what you have to do when these situations occur. So right now we're pushing short. We're retesting a bit coming into the Asian session, but this could continue to move down. Okay. So we just got CPI numbers, right? That came out of Canada. So we know that, hey, the bets are starting to increase, right? In terms of a more hawkish Bank of Canada or a continuation of hawkishness, right? So we got oil, we've got to watch that. Okay. So right now, look at the rejection. That's down. Okay. It's climbing up, it's moving down. 262 pips. We don't have, from a daily time frame, we don't have a swing low yet or anything. Okay. Where we may say, hey, we've got a new support level and we may be pushing back up. We don't have anything yet. So this is, look, higher high, higher low, higher high. We don't know if we have a higher low yet. We just know we've gotten a rejection. So we're kind of in the same situation with all of these pounds. When you get to that 4, we're still within this AB boundary. Okay? So you guys can see how even without the fibs, you can think, I got a rejection, I'm moving down, right? Even if it's temporary, I'm moving down. A temporary move on the pound CAD off that level, it's over 260 pips. Okay? So this just tells me I'm still within the framework of moving to the downside potentially. Now, we've got way oversold, but even at this level, we don't have a swing low yet. Okay, we know that this has been rangy. We just took that level out there on the 4, right? So maybe we get a correction and a continuation down. My bias is down on the pound. Okay, still kind of waiting for that dust to settle, but I'm starting to creep positions in to get short. So maybe with as wild as the pound has been, you start thinking in terms of, all right, I got an H6 retracement. Maybe I'm not prepared to hold all the way to this 118 for 1,700 pips, but I could drop a position there and put my stop up above the high and thinking maybe we're going to get back to 150.98. Okay. And if you're wrong, the market's going to let you know you're wrong. That's all you can do. That's all you can do. Okay. The one thing you have the most control over is your risk management, not over leveraging, so that you stay in the game, so that you can stay in the game. Okay. That's the key. So right now it's bearish on that pound CAD. Okay? Till the market tells us otherwise, we just took this low out. All right. So maybe a correction, further move down on the pound CAD. Any questions? All right. Just trade, right? Be smart with your money management, because we all know what's been going on with the pound. All right. If you even trade them at all, I know some people are just leaving it alone for right now. Okay. Pound Swissy. Okay. See the same price action. Look, pushing bullish. We're getting that good relief rally. The markets pushing long. Okay. Come to the daily. Look. We're key levels though. Right. So just think. You take this off. Yes, we've been pushing bullish, but we know why. Okay. The question with the pounds is we don't know how long that bullish momentum, because of what the BOE came in and did, how long it can sustain itself. We know a lot of times the pound kind of rides along with the market, with the stock markets. Okay. Huge financial center. So you'll see it. Sometimes you'll get a nice push in the pound bullish when the markets are doing well, stock markets, things like that. So we know we've been getting a relief rally. So that kind of falls in line. But now we're coming to some key levels technically. Now, if sentiment starts to sour again, we know we've been a good little boost came from earnings with some of these companies, earnings season, right? So if the sentiment starts to wane again, eventually that pound will turn back over. So we know we've gone bullish and we're back up to some key levels, okay, that it has to break through. So, okay, this has been moving bullish. Why? Because, well, I mean, these fibs are moving to the upside because it's been bullish momentum. Now we got a nice pullback, but now we're right back up to this level. Okay. So sometimes it's like, man, because it's such a mess, right? Right, you just have to play and read the price action. If it holds and we break and we start moving down, okay, think it's short term, back down to 108.96. If it breaks 108.96, okay, then I'm looking for checkbacks. If it holds, we got a continuation, right? So I wanted to cover that little lesson in the beginning, because these pound pairs are in similar situations. See how we took out this A? Now we know, for those of you who've been with us for a while, that when the A gets taken out, oftentimes you see a nice sizable correction to the downside. A gets taken out, we're running the fibs the other way. See, like that. Okay. But that's just confirming, right, that we got bullish momentum to the top side. Got an initial correction, we're right back in that zone. Okay. So we'll wait to see. The market will let us know. And you start to get downward momentum, back to 108.96, below 108.96, we look to continue to the downside short. Okay, back to 101. It becomes a simple game then, right? If it holds and we get back long, then we start looking for further continuation, right? You can slap your fibs on at that point, because we know, right, we're already in our current fib sequence, then we're just going to the D. See? Questions?
Benny?
Yes.
This, well, not this particular pair, but because of how the dollar is moving on like a lot of the other dollar pairs, man, it's been crazy to try to see. You get the 382 pullback, right? Then you make a push up, but sometimes I don't like playing this pullback when I know that, you know, it's a really
yeah. Oh yeah.
The dollar moving the way it is, it's pushing up, it's pulling back. Like, good grief.
I know, right? I'm with you on that, right? And those are some of the lessons even earlier this year. You remember the dollar ranged for a long time this year. So, you start to take note of that. And you say, hey, I'm either going to be extra careful or I'm just going to sit and wait to see better price action from the dollar, because it jams up everything. When that dollar and that DXY is indecisive, it jams up everything, right? When it's not trending in one particular direction. Okay. Like I was sitting here now, right? Now, if you get a breakout above these levels, right? And that's why we do those higher time frame levels, because we know that's what the big boys are eyeing, these higher levels. So we know, right, if it breaks out, then it's like you'll start to see things start to trend, right, in a particular direction. But right now it's ranging. This is what you're talking about right here, right? I was just stalling and not doing anything. And that jams everything. You got bond yields going crazy, right? Gilts, U.S. bonds, 2-year, 10-year going nuts. So the market's just looking for direction, right? Looking for direction. It's jammed up right now, right? Now, when was that? Earlier, I forget when it was, where we kind of had it was a similar situation where it was just taking his time, not really doing anything, and we found ourselves in similar situations, right? So you just kind of switch the game up a little bit, right? And you start to look at the levels. So when we go back to pound CAD, pound Swiss, and we start to see, right, that indecisiveness across the board, then you just play your setups. You just play your setups like that, because you get whipsawed all over the place. So I totally understand where you're coming from. Right? And then you've got the experience, right? You see that. You've been in it long enough to know, like, okay, dollar's kind of not doing anything, moving back and forth, and look what it's doing to the rest of the market. So this lesson was kind of just right on time with everything that's going on. And hey, at the end of the day, your number one job as a trader is to preserve capital. Okay? Preserve capital. So that's the waiting game. And that's why we always say patience is action. You just set up your chart, you wait around for things to break, and then you make your play. That's all part of being a trader, right? So great observation. Great observation. I'm seeing the same thing. Pound yen. All right. We know, I took that fib off. We know that extension got hit on that crazy fib, but look, even I, like, when I don't see it, when you see my charts like this, it's like, I'm trying to find some clarity too in the moves. I know that's a swing high. I know we got to break back below that 168.64. I know my stochastic is in the sell zone. Okay. So maybe, right, it's holding up at this area, in this area. See that there, how it's holding up? Okay. But hey, that lends me to believe that, hey, potentially we're looking for maybe more downside pressure. Okay. Those have been at us for a while, knows when it's time for the bottom to fall out, how these yen crosses is going to fall out. That's just how it goes. And it's usually an explosive move. When we get that relief, people taking profit, Bank of Japan stepping in, however it's going to happen, right? But right now, that's moving down. It's creeping its way down, right? So off that high, 180 pips. Okay, 180 pips. So maybe further downside pressure. Okay, same thing. We know where that extension is on this 4. I just ran it off this impulse move. We know where that extension is. So we watch. Okay, you watch. Maybe you got in up until that point. Now you're out. Maybe you haven't done anything at all. Well, let your charts tell you what's going to happen. All right. We start moving down. We start breaking levels. Then we're probably going to come back. So now I start to set my targets, 162.66 potentially. If we break down below. But hey, if I get a break above 169.95, right? If it breaks above that, then if we hold, we're going to the extension. Make the decision on whether or not you want to play that. Okay. 372 pips. Right? If across the board we don't see any relief in that yen, then maybe we get this push down, we form a support somewhere around these levels, and then we start to push up again and we break through 169.95. So it's kind of just, if you're not already short, it's just a wait and see. You can see the stochastic is right back in the buy zone on the 4. Okay. Hard one to call right now on those yen crosses, but that's where we are. Let it play out. Let it play out. Now, if you have a bias, hey, I'm dead set bullish, then you want to wait for this move to happen. Okay? You want to wait for this move to happen. Take advantage of it. All right. That's the pound yen, pound New Zealand. Okay. All right. Starting to reject up around that zone. See all of this? This is a hot mess. So you start to play horizontal levels there. Okay. Look. You can run your fib, run a check. Where am I? Okay. But when you're moving sideways like this, look at your levels. So we started thinking in our head like, oh, well, if that pound, right, starts to weaken again and we get that break at 195.41, so you just start putting levels in your head, right? Now look to get short. Right, see if it'll give back everything that it gained on that impulse move. Right? And that's what you learn fundamentally, right? So you step in, right? Bank of England steps in and starts buying those gilts, not because of it was declining, the rate and the speed in which it was declining, the sell-off in the gilts were occurring. So they had to step in and push it back up. Okay, push it back up, try to find some equilibrium. Sometimes things like when the Bank of Japan stepped in, sometimes it's too fast. It's too much of a shock. It's not that it's moving in a particular direction. It's the rate and speed at which it's moving that's causing that shock to the market, and something has to be done about it. And that's what you saw. So now we're kind of getting back to normal. We see this level here. What do you want to do? Unbreak it? Okay. So when things get a little crazy, that's what you do. Go back to your fundamentals, your support and your resistance levels from the top down, and then make your plays. And then the market will start trending. Those ABCDs will start happening. All right. So that's that there.
I found when it's like that and you know that it's coming into like a support.
Yes.
Support. Like I over the last couple of days, I went to like the 15-minute and then just
to
the downside and take the trades. To the downside. So
that's a good. Yeah, it works well, doesn't it?
Yeah.
Yeah. You know, so you just, you know, in these times, right? And then sometimes it's all Ryan always talks about the discovery, because you may start out right learning from us, hey, foundationally swing trading, but because of certain events and certain situations occur that cause you to tweak your game a little bit, you may have a new discovery and say, you know what, I actually like trading this. You know, I like trading this way, so I'm going to continue to do it, right? So even here, right? Look, identify, okay? Look what happened in that zone and that reaction, it held and it pushed up. So you may like those moves. That's fine. That's fine. So look, we got a break here, okay? See, and that's what we're talking about. See above that high, that stop, and you see how we're moving down? And if it's going to start trending, that's when your waves occur, right? That's when you start getting those ABCD waves. Right? So maybe we get it to come back, right, into the zone. And then it makes its way back down. Okay? We don't control that part. We have an idea, okay? But look, see, it's moving down off that level. So that's how you look at all of these setups. So if you look here, see, and you see I have it right below this 195.41, right? Look out. You have your stop set. The market will tell you when you're wrong. Until then, right, your idea is good. Your idea is good. Pound dollar. Okay. hey, through all the mess, all the craziness with those other pairs, this is the one that's been steady, right? Getting the reaction. Here's that D extension off the weekly. That's a weekly D. Okay, we'll see what happens there. Just like you said, the dollar's playing games right now. Okay, so, right. I don't know. Did I take my fib off of this one? I was doing some adjusting earlier. Maybe I did. But look, again, I think I stripped it off of all the pounds. But here, look at that. Swing high? Absolutely. See? That zone's holding for right now. We got a stochastic that's moving back into being overbought. So when we come to that 4, right, that idea that we've had on the table for a while, look at it. It's a grind shot. Okay. And it just leads back to what you said about that DXY, right? See that? Now let's mess with this grinding, right? So off that level, already doesn't look like much. It's 230 pips. Okay. So that's where we are. That's where we are. So still holding, looking bearish. Okay. But like we said, you can shorten these opportunities up. Okay. Hey, I got a swing high up against this daily. Look at my nice bearish candle on the 4. I'm short, right? That's just reading candlesticks. Nice bearish close, swing high, nice bearish close. I'm short. Where am I short to? Well, Benny, I don't want to hold this for 1,300 pips. I'm just going to get short back down to next 4-hour support. I got my direction right. I'm good. Even off of the bearish candle. Okay. Even off of my bearish candle, that's 100 pips. Okay. What's that? 150 or so. Back to support. Then I'll make a decision what I want to do from there. Maybe I'm out completely, wait for it to break and retest, and I'll continue. Maybe I want to play that game all the way down to 99.76. If that's the direction it's going to go ultimately. Okay. Just think your way through it, guys. You got it. Don't let all the mess that's been going on in the markets get you confused, right? And like we always say, when in doubt, stay out. Stay out. Okay. So yeah, we this level up now. I'm short over 200 pips or whatever, wherever you got in. Oh, wow. Okay. If it continues, and I'm going to continue. Play it just like that. All right. But if you didn't have a fib on, you can still see that happening. Didn't get through all the pairs, but I hope just slowing down and taking it back to the basics helped everybody tonight, just with top-down analysis and understanding the importance of support and resistance, especially when things get a little shady with the market, right? The back and forth. Okay, it's traded from zone to zone. So I hope it helped everybody. We don't have any questions. All good?
Thank you. That was good.
Oh, you're welcome.
I have to kind of look for some other pairs to trade because I've been watching these for a while.
Yeah, absolutely, right? Well, hey, we know the dollar's ranging a bit, but it's pushing bullish, right? So this is moving down, okay? So if that dollar continues to push bullish, this is most likely going to continue to fall bearish, okay? So would I sell it here? Nope. But if I get a break at that level and a pullback to retest, right, like so, then I'm going to play it and look for further declines. Right? If you're the type that likes to stop right closer, then hey, if it breaks that level, I've got it marked up and it retests, then I put my stop somewhere up above it. And see if it'll continue to fall. Okay, because we know we had the fib on there and the projection is way down here. If it's going to continue to fall bearish. Okay, and that's the game. That's the game. All right, everybody. All right. No, we went over a little bit tonight, but I hope it helped everybody. Until the next time, tomorrow with my awesome partner, Mr. Ryan Carthage at 6:30 a.m. Eastern Standard Time. Everybody have a good night.
Good night.
Good night. Thank you.
You're welcome. Good night.
Good night. Thank you.